Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. Welcome back to the show, Rick.
A distinct pleasure, Jim. Thanks for inviting me on.
Rick, all the major stock markets in North America down today. What's behind that?
Well, they ran into a hit and pivot target on Friday. Chat room subscriber and I both agreed that in the E-mini S&Ps that 4342.75 was a good place to get short. Actually, his target calculated in a different way was a point higher, 4343.75. So the trade is still holding, and so let's just say the reasons for this nice downtrend we're having today are purely technical.
Should this be a sign of shaky times or just a minor bump?
No, I don't think I'd try to sort of relate what the stock market is doing to whatever these times are. I think any idiot can see that it's about as shaky as it's been since man has walked the earth. You know, there's so many things that are so shaky, but we chartists have learned that because there is no correlation between the stock market and the real world, that we shouldn't pay attention really to the shakiness of things. We also have had our imagination stretched to an extreme as to how shaky things could get. I thought for sure that the financial system had it back in 1991 when we were trying to bail out the S&Ls, and we're talking really about pocket change then. The whole problem was kind of reckoned in the range of $800 billion, which isn't even, that's not even a number worth discussing anymore. It's beneath everyone's radar. So, failure to imagination, but I think you got to imagine just how nutty things could get before they actually do collapse.
What's going on with gold?
I had an interesting back and forth. A friend of mine sent me a post in the Rambus chat room. Rambus is a pretty good technician, and he's got a guy named Plunger that puts out these weekly reports. And Plunger said, hey, look, everybody out there who keeps trying to say that gold is in a correction is wrong. And he proceeded to make, I would say, a pretty compelling case that gold is in a bear market. The good news is that it's really it comes down to semantics, whether gold is in a long-term secular bull market, which is being corrected right now, or whether you choose to call the correction a cyclical bear within a secular bull. So either way, I guess I sort of find myself agreeing with Plunger, but gold seems in no hurry to forge much higher. I think it's up today only because I put a headline on my commentary that said maybe gold really does suck, and that's kind of a tongue-in-cheek follow-up to a headline I put out there 5 weeks ago that says gold really sucks, here's why. And I didn't mean that. I was simply put out a provocative headline to get bulls to read it because the piece was very bullish, and it said, now's the time to jump into gold without qualm. And that proved to be a timely error because a couple of days later gold really got socked, and of course it's been hit pretty hard since. But and I mentioned that one thing I liked about gold was that the sleazeballs who manipulate it were the takedown artists were not having such success. The takedowns were smaller. like $40. And no sooner had I said that than they bludgeoned gold for a $120 loss over just a few days. So I was wrong on both counts. So let's just say I'm putting a different terminology out there. I think gold really is in a long-term secular bull, but this correction is just, I think, waiting for a tectonic shift in the global economic and geopolitical picture before it really blasts off. And I don't see too terrible a correction. And if gold were to get hit down to the level of August COMEX currently trading 1,700, down around 1,500, I would back up the truck. And I do give a very specific number where I would back up the truck and do what I call a mechanical buy. But it allows for gold to get hit, and also GDX, which tracks the gold miners. Plunger and I both agree that anything below 30, and it's currently trading around 34 and change, anything below 30 would shift gold from the disappointment phase to the capitulation stage of this, we'll call it a cyclical bear. So my worst case thereafter would be down around 27 and change on GDX, which is not too terrible. That's only a further 10% correction below 30.
Do you know if Russia and China are still buying up every piece of gold they can find?
I don't think you can. You have to take all those rumors with a grain of salt. Who the heck knows what Russia and China are really doing? I think you can take sort of as a baseline truth that Russia and China have a respect for gold. I guess it's sort of the flip side of their disrespect for a dollar that's been completely trashed. That, the dollar, strictly speaking, is just it's just an IOU. There's nothing behind it. So I think China and Russia are right to scoff at the dollar. But at a policy level, I think they both encourage they don't do anything to discourage their citizens from buying and holding gold. And at the official level, I guess you have to assume that they're buying gold, because they understand that the dollar ultimately is trash. And I say that, as a deflationist who expects a short squeeze on the dollar to push it to extreme heights, notwithstanding the fact that it's fundamentally worthless. But, I would say that China and Russia are almost surely buying quantities of gold just so that they can have the last laugh over something that they know is unavoidable.
There's been this debate about Bitcoin siphoning away money that normally would have gone into gold. Are you one of those people who thinks that?
Well, when I put out my gold is garbage, why gold sucks thing, the tongue-in-cheek piece that said actually buy gold, I mentioned that as a reason. I said that the takedown artists were not having success knocking gold down on a given day because they were finally coming to the realization that gold is a much better discounter of inflation than Bitcoin, and that because Bitcoin at that time was getting pretty well savaged, I felt that the money that might ordinarily be flowing speculatively into Bitcoin would finally start going where it should go, into gold. And I guess even there, maybe a little premature, although it's not quite clear. I see Bitcoin as having another leg up, only to the extent that the broad averages, the stock averages, are going to have another manic rally. So I think that's going to happen, but it's not certain. Now,
it looks like Bitcoin is getting to the point where people are getting scared to use it because of possible regulation. And one of the world's biggest sellers and buyers of Bitcoin, Binance, banned from doing business in the UK. Thailand has a criminal investigation into it. Ontario in Canada says it won't honor Binance transactions after this year. So Binance is pulled out of there. Is there greater fear now that Bitcoin could be regulated into the ground?
That's a lot of crap. to put it gently. If you look at any big bull market, and I remember standing there, in the trading pits looking at Microsoft, and thinking, $80 a share, how much higher can it go? And of course, in those periods when Microsoft was giving up ground, and you could say the same thing about Google or Tesla or whatever, the stories that come out are so insanely bearish. Actually, that's a wrong word. They aren't insanely bearish. They sound perfectly plausible. In the case of Tesla getting whacked all the way down to 200 and something a share, the company's survival was in question then. You had reports from drones about all these unsold Teslas sitting on the parking lots, and Musk was just a heartbeat away from bankruptcy and this and that. So those stories they're the same thing really as the garbage that gets spun these days about, this government or that government's going to crack down on Bitcoin. And we've already been through a cycle of that exact story. There's always going to be some sort of crackdown, and lo and behold, Bitcoin sort of rallied out of the abyss, and when it was rallying, all the geniuses were saying, full speed ahead, and you had, the big guys like Paul Tudor Jones and Michael Saylor and Max Kaiser for that matter. They were gung ho. So these stories ebb and flow, and to some extent they're spun really just to make the idiots dump into strong hands. But you could also say that the stories themselves are generated by cyclical changes and cyclical swings in emotion. So we got, the stories are almost irrelevant. I think it's enough to say that from a technical standpoint, Bitcoin is in a downswing, and it's got a mother load of supply to eat through, that is, it's just layers of people who bought the last rally and aren't in at $300 per Bitcoin like some of the big guys and the smart guys. They actually bought in at $30, $40, $50, $60,000 per, and they're going to be big time supply, because the prayer on their lips right now is, please, Lord, just get it back to 40,000, and I'm not even going to try to make money. I'll just get out and I'll never do it again.
We'll have more with Rick Ackerman right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine, situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration, with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Rick Ackerman. Rick, what's going on with the U.S. dollar?
Well, funny you should ask. I'm a long-term dollar bull, but you can't blame the dollar for having its year of doubt here. Well, actually, it's been doubting since sometime in 2016. We've been in kind of big swings, and so far, the dollar index has held above a very key low that was made in 2018, early in 2018, down around 88, currently trading 92 point something. So when you consider that the dollar has been trashed more than at any other time in human history by the evil wizards at the Federal Reserve, and the dollar's really taken a hit, because there's been trillions of them put out there, really from thin air, to the point where we talk about rebuilding America with money from trees. Everybody's become such a believer that you think, well, why doesn't if we're going to stimulate the economy, why don't we just have a tax jubilee for a year? Because it would be fewer trillions, and we're actually laying out there in quote unquote stimulus. So the dollar has really taken an enormous hit, and yet it's still well above that key low from back in 2018. So I don't know. When I talk about being bullish on the dollar with a target of 120 and above on the dollar index, it's not it's not based on cyclical forces, but secular ones, and predicated on essentially the end game where we have a deflationary short squeeze on the dollar. And where that comes from is simply that everybody who owes dollars is challenged in some financial crisis to get their hands on the real thing, and short-term paper, all short-term instruments will not be allowed to roll over, so that the borrowers will have to come up with real cash. That's where I think the short squeeze originates. But also another part of it is the down force that comes from debts that have reached the point of being unpayable. And there are just two ways that we privately and publicly can discharge those debts, and that is by hyperinflation or deflation. I've spent 25 years explaining exactly why a hyperinflation is so unlikely, and why, on the other hand, a deflation would come about in some precipitous way of a failure in some market, or failure of the money market to clear, or something like that the Fed's not ready to deal with. They're very good at monetizing and attempting to inflate over years, but trying to reliquefy a system where all trust has vanished and liquidity has vanished overnight, I don't think they can do it. So that's why I'm a deflationist, and why deflation implies a much stronger dollar.
14 trillion put into reverse repos. What is that? Should people be concerned?
Yeah, they should, but no one knows why. I've seen some pretty good experts falter in discussing how, the repo market, that there's no question that the Federal Reserve has been in there with enormous mop-up operations. But nobody, I don't think anybody really understands the markets well enough. It's not only just a kind of understanding how they function mechanically, but how that the functioning capability interacts with mass psychosis, and there you sort of have to play it forward as to, these repos are specifically allocated among these institutions or whatever, and you can only take that kind of that logic to a certain level before you have to start thinking intuitively about what really will happen if we have a liquidity crisis. I say if, but there is a liquidity crisis coming, and I'm just trying to avoid saying that it's going to happen like tomorrow.
Rick, anything else we should be keeping an eye on right now?
Well, I keep hearing from my friend Sean Brown. He's a hedge fund guy based in San Francisco, and a couple things. He's got a lot of commercial real estate. He loves Starbucks as a tenant because, they pay their insurance and taxes by themselves. A lot of things that the landlord usually gets stuck with are paid by Starbucks. But he says the flight out of San Francisco of commercial tenants has been phenomenal. And I think San Francisco, where I lived for 22 years, is headed into the toilet, really. The crime stories that you read, and the matter of fact, if you leave your car out there in the neighborhood, you're just asking to have the platinum exhaust component stolen. And the theft, San Francisco is really chaos, and it's going to absolutely kill their convention business, which will be a layer on top of their the tax loss, the loss of tax-paying businesses. So it's amazing, but the most beautiful city in America is about to really go down the toilet. Sean Brown, same guy, has been buying silver, stepped up his silver purchases since January. And he typically his last order was for 100,000-ounce bars. This is several $1 million worth of silver. And you ordinarily it takes 3 or 4 days for him to get delivery. But Monex, which is a big purveyor of bullion said, look, it's going to take at least 3 weeks to get this silver. And the status of the shipment is uncertain at this point. So if Monex can't get silver, then you better believe there's a shortage of supply. And so anytime silver is down, it's down 30 cents today, being sold presumably by blithering idiots. You really just have to accumulate the physical and say, screw the news, screw what the market does, screw even the fact that maybe we're going to have one last washout in gold and silver to really clear the air. So I think I've covered everything, Jim, and I thank you for the opportunity to get it all out there.
Rick, thank you so much for chatting with us.
Always a pleasure. I look forward to our next chat.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. If you have any questions for Rick or any of our other guests, you can send them to info@howstreet.com, our YouTube channel, Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.